I'm Jesse Mackey, CIO of 4Thought Financial Group, and this is 4Thought's Market Perspective of January 18th, 2022. Following a year of double-digit returns in 2021 for U.S. and international developed market stocks, the first 2 weeks of trading in 2022 have seen a reversal of trend, leaving the majority of stock and bond types with negative results, while emerging market stocks are positive so far. Despite this broad but not deep recent slide across most financial market assets, as of the close of business on Friday, the S&P 500 index had still experienced net additional gains of 27.89% since the point of recovery from its last 10% plus correction, which was on November 9th of 2020. Historical data indicates that once a new bull market has been confirmed, which happened on August 18th of 2020, when the S&P 500 index had recovered from its March 23rd, 2020 bear market low point and achieved a new record price, the longest time period on record since 1950 before the beginning of another bear market was 7.44 years, with an average of 2.44 years. Only 1.41 years have elapsed from the point of bull confirmation in this instance so far. There's usually been at least one 10% plus correction, but often several, between most bear markets in history. The average time between the end of one correction or bear market and the start of another is a little over 1 year. The first correction in the current bull market was completed 1.31 years ago on September 24th, 2020. We refer to the combination of a correction and its corresponding recovery, which was registered on November 9th of 2020, as a wolf market. Our data set also tells us that about 55% of wolf markets like the last one we experienced have been followed by a period that exhibits trailing one-year returns of 30% or greater without a 10% plus correction, something referred to as an eagle market. The first eagle market subset of the current bull market was quantitatively confirmed on March 1st, 2021, and it continued at least through January 4th of this year. It's unclear whether this eagle is now ended, because this can only be confirmed 1 year in arrears by definition. Once an eagle market has been indicated, it continues for an average of an additional 5.35 months. This instance had continued for 10.53 months as of January 4th, which places it well above the average duration if it is indeed now complete. Eagles may be followed by any of the other three market types, including a flattening of growth rates to return to a standard bull market or an immediate reversion into a wolf or bear market. Given that stocks may still be relatively early in the traditionally defined bull portion of the market cycle by historical standards, an immediate bear market, although certainly possible, appears the least likely of the various scenarios, while a 10% plus correction is becoming increasingly likely in the short to intermediate term. Based on analysis of the complete historical market type data set using our multi-method adaptive algorithmic process, we're now allowing overweight allocations to opportunistic investing, neutral allocations to strategic asset allocation and liability-driven investing, and underweights to selective concentrated investing. From a probabilistic analysis perspective, valuations tell a story that's relatively negative for most stock types when compared to portions of the bond markets. On this basis, stock types range from near fair value, in the case of emerging market stocks, to slightly overvalued, in the case of U.S. large cap stocks. Bonds range from moderately undervalued, in the case of investment-grade corporate bonds, to near fair value, in the case of Treasury inflation-protected securities. Investment-grade corporate bonds now reflect the most attractive pricing relative to the alternatives, while U.S. large-cap stocks are the least attractive. Against this backdrop, the outlook for stocks is now slightly negative in the short to intermediate term based on the overall aggregate of historical market type data analysis and quantitative probabilistic analysis. I hope this was helpful. If you have questions or you'd like to discuss what this means for your particular situation, please contact 4Thought at 516-300-1617 or at info@4tfg.com. And don't forget to subscribe to our blog feed and our YouTube channel. Thanks for watching, and see you next week.